why have mortgage rates gone up? It's because of inflation. The cost of items like petrol, food and energy has gone up faster than at any time in the last 4 decades. It peaked in October last year at 11.1%.
Inflation eats into the pounds in your pocket. It's as simple as that. Makes everybody poorer. It means prices go up. It means your savings get eroded. It puts jobs and livelihoods at risk.
The Bank of England is trying to bring inflation back down to 2% to keep the economy on track without prices running out of control. So it responded by raising interest rates a record 14 times in a row until this September, when they were held at 5.25%.
The idea is that when interest rates are higher, it's more costly to borrow and it's more attractive to save. So that means that people are less likely to want to go out and spend money. That takes money or takes demand out of the economy, and then that tends to push prices down.
Lenders have passed on the interest rate rises by increasing their mortgage rates. The average 2-year fixed mortgage rate had been under 3% for about 7 years. But they rose with interest rates, and by July of this year, they'd climbed to their highest level in 15 years, at 6.86%.
On average, we think that it means something like an extra £300 a month for those with mortgages, and for some it will be much higher. So that's a really substantial fraction of people's incomes, kind of getting on for about 10% of their disposable income, and so that really has a material impact on their living standards.
Around 4.5 million people across the UK have seen their mortgage rate rise. Some are on variable rate mortgages, which have generally increased with the Bank of England rate. Others are coming off fixed mortgages and finding their new rates are much more expensive.
Hi.
Hey, you must be Sebastian.
I am, nice to meet you.
I'm Coletta. Mortgage advisor Sebastian is seeing firsthand how this is impacting people's finances and choices.
We've seen everyone panic, not knowing what's going on with the economy, the cost of living, and they just want answers. It wasn't impacting the mortgage market up until, 12 months ago, and then everyone's like, oh, hang on a second, we're seeing rates creep up, what's going on? And now it's hit the homeowners and first-time buyers. People have sleepless nights with this stuff. They're aware that they're coming to their mortgage terms coming up, and they're just terrified.
Interest rate rises can be great if you're a saver, but painful if you're a borrower, meaning this financial pain is being felt by some much more than others.
So those in their 30s tend to be hit a bit more than those who are a bit older, and that's for 2 reasons. The first is they tend to have a larger outstanding mortgage. They've not had as much time to pay it down. And secondly, they tend to have incomes that are a little bit lower than those who are older than them. And so relative to their income, these mortgage rates particularly hurt.